Hey there, econ junkies, finance fanatics, and anyone who's ever wondered why their savings account is basically a glorified piggy bank. Welcome back to Boss Economics World, your one-stop shop for decoding the wild, wacky, and downright absurd world of money, markets, and macroeconomic mayhem. I'm your host, the guy who's here to break down the Fed's latest drama, Wall Street's tantrums, and why your grocery bill still feels like a mortgage payment. So, grab your coffee or your whiskey, no judgment, and let's dive into the economic circus that is August 2025. Folks, it's August 18th, 2025, and the financial world is buzzing like a beehive on Red Bull. Why? Because this week, all eyes are on Jackson Hole, Wyoming, where Federal Reserve Chair Jerome Powell is about to take the stage at the Fed's annual economic symposium. This isn't just any speech, people, it's the Super Bowl of monetary policy pronouncements, the moment where Powell could either validate Wall Street's fever dreams of rate cuts or drop a truth bomb so heavy it sends bond traders running for the hills. And let me tell you, the stakes are higher than a Silicon Valley tech bro's ego. Here's the deal, bond traders, those caffeine-fueled wizards of the treasury market, have placed a massive bet that the Fed is about to slash interest rates. They're pricing in a quarter-point cut for September 2025 like it's a done deal, with at least one more cut by year-end. Some of the bolder ones are even rolling the dice on a jumbo half-point cut, the kind of move that makes headlines and sends stock markets into a sugar-high frenzy. But here's the kicker, Powell's got the power to either bless this bet or blow it up, and the market's hanging on his every word like a reality TV cliffhanger. So, what's behind this high-stakes drama? Oh, just a little thing called the economy, which, as usual, is serving up a piping hot mess of contradictions. Let's break it down, boss economics style, from the surface-level shenanigans to the deep, dark economic underbelly, and trust me, we're bringing the latest data, the spiciest examples, and a healthy dose of satire to keep you awake through the jargon. First, let's talk about the bond market, because it's basically the crystal ball Wall Street uses to predict the Fed's next move. Right now, bond traders are acting like they've got Powell's playbook memorized. Yields on treasuries, those IOUs the US government issues to borrow money, are dropping faster than a bad TikTok trend. The 2-year treasury yield, which is super sensitive to Fed policy expectations, is hovering around 3.75% in August 2025, down from its recent highs. Meanwhile, the benchmark 10-year yield is chilling at 4.32%, barely budging in early Asia trading on Monday, August 18th. What does this tell us? Traders are betting big on a soft landing, that magical scenario where the Fed cools inflation without tanking the economy. Sounds dreamy, right? But here's the thing, bond traders aren't exactly known for their humility. They're pricing in rate cuts like they've got a direct line to Powell's brain, and they're banking on a weakening job market to justify their bets. July 2025's employment data was a real buzzkill, showing weaker than expected job growth and pushing unemployment up to 4.3%, according to the latest Bureau of Labor Statistics (BLS) report. That's not a disaster, but it's enough to make the Fed sweat, especially when inflation is still stubbornly above their 2% target. The Consumer Price Index (CPI) for July 2025 clocked in at 3.1% year-over-year, down from its peak but still hot enough to give economists heartburn. And don't even get me started on producer prices. Wholesale inflation jumped more than expected in July, signaling that businesses are still passing on higher costs. Yikes. So, the bond market's basically saying, hey, Powell, the economy's cooling, jobs are softening, and inflation's still a problem, time to cut rates, buddy. But here's the million-dollar question, will Powell play along, or will he throw a curveball like he did in 2022? When he warned that fighting inflation would bring pain to households and businesses, sending yields soaring and markets crashing? Stay tuned, folks, because Friday's speech is gonna be a doozy. Now, let's peel back the layers and get to the juicy economic issues lurking beneath the surface. The Fed's in a pickle, people, and it's not just because of bond traders' bets. Powell and his crew are walking a tightrope between two competing goals, keeping inflation in check and preventing a full-blown recession. And oh boy, the data's not making it easy. On one hand, the labor market's showing cracks. That 4.3% unemployment rate might not sound bad, but it's up from 3.7% a year ago, and job growth has slowed to a trickle. Only 114,000 jobs were added in July 2025, way below the 200,000 economists were hoping for. Plus, wage growth is cooling, which is good for inflation but bad for workers who are already struggling with sky-high costs for everything from rent to ramen. If the Fed doesn't act soon, we could be looking at a downward spiral, fewer jobs, less spending, and a recession that hits Main Street harder than a freight train. On the other hand, inflation's still a beast. Sure, it's not the 9.1% monster we saw in mid-2022, but at 3.1%, it's still well above the Fed's 2% target. And here's the scary part: a lot of that inflation is being driven by structural factors, not just temporary supply shocks. Take housing, for example. Rents are up 5.1% year over year, according to the latest Zillow data, because there's still a massive shortage of affordable homes. Then there's energy. Oil prices are hovering around $85 a barrel, thanks to geopolitical tensions and OPEC's production cuts, keeping gas prices painfully high. And don't forget tariffs. President Trump's latest trade war antics have jacked up costs for imported goods, adding fuel to the inflation fire. The Fed's been waiting to see how these tariffs play out, but the data's clear: they're not helping. So, what's Powell supposed to do? Cut rates to boost jobs and risk reigniting inflation, or hold steady and risk a recession? It's like choosing between a punch to the face or a kick to the stomach. Neither's gonna feel good. And to make matters worse, the Fed's under tremendous political pressure. Trump and his administration are practically screaming for rate cuts, claiming it'll supercharge the economy ahead of the 2026 midterms. Trump's even gone so far as to push for replacing the head of the BLS, accusing them of cooking the books on jobs data. Sound familiar? It's the same playbook he used in 2020 when he tried to strong-arm Powell into cutting rates during the pandemic. Powell's resisted so far, sticking to his data-driven guns, but the pressure's mounting, and it's starting to spook investors. Some are even worried that the Fed's independence is at risk, which could mean higher risk premiums on long-term treasuries and a whole lot of market chaos. Now, let's go full boss economics and dive into the deep, dark underbelly of this mess. Because folks, this isn't just about Powell's speech or bond traders' bets. It's about the structural cracks in the economy that keep getting papered over with cheap money and wishful thinking. First, let's talk about debt. The US government's borrowing like there's no tomorrow, with the national debt hitting a jaw-dropping $35 trillion in 2025, according to the US Treasury Department. That's 120% of GDP, folks, and it's not slowing down, especially with Trump's latest tax and spending bill promising more fiscal stimulus. Sure, that might juice the economy in the short term, but it's also putting upward pressure on long-term yields, which could undo the Fed's efforts to ease financial conditions. And don't forget corporate debt. US companies are sitting on $13 trillion in liabilities, much of it junk-rated, according to Moody's. If the Fed cuts rates too aggressively, we could see another wave of zombie companies borrowing cheap money to stay afloat, setting the stage for a debt crisis down the road. Second, there's the inequality problem. While Wall Street's popping champagne over rate cut bets, Main Street's still struggling. The latest Census Bureau data shows that real median household income has barely budged since 2019, adjusted for inflation, while the top 1% have seen their wealth soar by 30%. Why? Because low interest rates and fiscal stimulus tend to boost asset prices, stocks, real estate, you name it, while doing squat for workers' wages. If the Fed keeps prioritizing Wall Street over Main Street, we're looking at a recipe for social unrest, not to mention a political backlash that could make Trump's meddling look tame. And finally, let's not forget the ghost of 2008. Back then, the Fed was too slow to cut rates, and the result was a financial meltdown that took years to recover from. Today, some economists, like Scott DiMaggio at AllianceBernstein, are warning that the Fed's already behind the curve on easing. If the August jobs report, due out September 5, 2025, shows another weak month, the pressure for a half-point cut will be deafening. But here's the catch: aggressive cuts could signal panic, spooking markets, and undermining confidence. It's a classic catch-22, and Powell's got to navigate it with the whole world watching. So, what's the bottom line, folks? This week's Jackson Hole speech is more than just a policy pronouncement. It's a litmus test for the Fed's credibility, the market's sanity, and the economy's resilience. If Powell validates the market's rate cut bets, we might see a short-term rally, but at the cost of long-term risks like higher inflation and debt bubbles. If he pushes back, we could see a market tantrum, with yields spiking and stocks tanking. And if he waffles, well, that's just gonna leave everyone confused and cranky. Here at Boss Economics World, we're not holding our breath for a miracle. The Fed's stuck between a rock and a hard place, thanks to a toxic mix of political meddling, structural weaknesses, and data that's about as clear as mud. And let's be real, whether Powell cuts, holds, or does an interpretive dance on stage, the real winners will be the Wall Street fat cats, while the rest of us are left wondering why eggs cost $7 a dozen. So, stay tuned, Econ Warriors, because this story's far from over. Will Powell save the day, or will he just kick the can down the road? Will Trump's meddling backfire, or will it force the Fed into submission? And most importantly, will any of this actually help you, the hard-working folks trying to make ends meet in an economy that feels like a rigged casino? We'll be here to break it all down, with data, drama, and a healthy dose of snark. Until next time, this is Boss Economics World, reminding you, when the Fed's in the hot seat, the economy's on fire, and the market's a mess, we're here to make sense of the madness. Keep hustling, keep questioning, and keep watching.